Good day and welcome to another episode of your Money Moment. I'm your host Mauritz Oberholzer, and today we'll be discussing a topic that has been talked about very often, and that is offshore investing. Some commentators say you need to take every rand you have offshore, and some say we have great opportunities locally, so you should not be taking too much money offshore. The amount allocated towards offshore is something that will differ with each person based on their needs and risk tolerance, but every person should have some allocation towards offshore equities and assets. So what are great reasons to have money offshore? Well, they are as follow. Your investment risk is spread across geographies and economies. So if one economy or area is underperforming, your risk is spread amongst other areas across the globe. The second reason would be that offshore gives you access to industries that are not represented locally. Things like biotech and the developed technology sector is not represented in South Africa. The third reason would be protection against the local currency risk. As a South African, we all know about the volatility of the rand, and by diversifying offshore, you can hedge against the risk. So what is the perfect ratio or allocation for your needs? As mentioned in the beginning of this episode, each person needs to establish the perfect ratio based on their needs, but offshore investing should not be treated as a short-term investment vehicle. Regulation 28 that regulates the pension funds and retirement products have limits on offshore investments of 45%, but it is impossible to have a one-size-fits-all ratio. So some things to consider before investing offshore. The volatility that comes with offshore investment makes it a great long-term vehicle, but by long-term I mean 7 years or more. Secondly, there are also different ways to invest offshore. The one option is taking your money and converting it into a foreign currency and sending it overseas and physically investing in those countries and their assets. Another less admin-intensive way is local ETFs or unit trusts, where the fund does an asset swap and your money stays in rands, but it still tracks the offshore asset, which also hedges against our local market. Another thing to consider before investing offshore is political risks. If you invest offshore, there will be various political risks, especially if you invest in emerging markets. And lastly, a big thing to consider, especially when you hear of a hot tip from a friend, is the liquidity. Liquidity refers to how quickly and easily you can sell an asset and convert it into cash again. This is another aspect to take into account before blindly investing offshore, and some asset classes overseas have low liquidity, which means you might have to see through the hard times, and also you're going to have a hard time selling those assets. The world of offshore investing is incredibly big and can be daunting at times, but if you stick with a long-term strategy, as I mentioned 7 years plus, and you partner with a qualified financial planner or investment specialist, it can be very rewarding in the long term. So remember, do your homework and stick with a reputable company when making these offshore investments. So that's it for this week. Thank you for tuning in. Catch me next week, same time, same place.
When you're navigating through life's big events, like buying a home, starting a family, or approaching retirement, you need sound and impartial financial advice. Mauritz Oberholzer, a financial advisor at Stonehouse Capital, specializes in personal financial planning. Visit mauritzoberholzer.co.za or call 082 774 1996. For practical and easy to understand advice and tips, don't miss your Money Moment with Mauritz Oberholzer, Thursday mornings at 10 on E-Radio.